Wheaton Precious Metals, newly listed on the London Stock Exchange just late last year, but now 15 years into existence. Created the company back in 2004. I was part of the founding group back in 2004, and we're very actively traded on both the New York Stock Exchange and the Toronto Stock Exchange also. So there will be some forward-looking statements in this presentation. I urge everyone to understand the risks associated with those forward-looking statements. That is all detailed in the fine print here on this page and in the appendix and on our website. So please, everyone, make sure you understand that risk. So who is Wheaton Precious Metals? Our vision at Wheaton is to be the world's premier precious metals investment vehicle. And we're going to do that by fulfilling our mandate, which is to deliver value through the streaming business model. Streaming is a business model that we created back in 2004. We were the first company to do streams. It's a bit of a variance on what a traditional royalty is, but it's a good, strong business model. And we're going to deliver that value to all of our stakeholders. That's a real key point to all of our stakeholders, because we do have multiple stakeholders. Of course, our shareholders, both past, present, and future shareholders, by delivering low risk, high quality, diversified exposure to profitable precious metals production, and also delivering the growth optionality that comes with good, strong assets, good, strong investments. To our partners, by crystallizing the value of their non-core, typically what we do is purchase non-core byproduct precious metals, but crystallizing that value and giving them capital so that they can continue growing within their own core franchise. But it's not just the upfront payment that we deliver value to our partners. We're always looking for ways to deliver additional value and additional support to our partners. We have an overlying mantra here at Wheaton: the stronger our partners are, the stronger we are. And so we have a strong technical ambassador program where we supply technical expertise on an ad hoc basis and whenever needed to try and provide additional support to our partners. But perhaps even more importantly is the support we put in terms of strengthening their own social license, which is where when we, to our third group of stakeholders, which is our neighbors, the people that live, the communities that we live in, that we work in, but not only that, the communities around the mine sites where we get our metal from, where we have good, strong programs delivering sustainable benefits and overall improvements to the quality of life and strengthening the social license that our partners have at these operations. The streaming advantage, it gives us access to very high quality assets. Our typical target is some of the most profitable base metal mines. They all have byproduct precious metal production. And so targeting these high margin, most profitable base metal mines around the world and getting access to the quality precious metals production that comes from these mines. The streaming contracts give us predictable costs, a huge advantage, especially comparable to traditional mining company investments. Our capital costs are fixed and prescribed by the contract, and our operating costs on a per ounce basis are fixed and prescribed by the contract. No cost surprises. You know what the costs are. They are predictable many, many years out. They're very predictable. We've also got a very innovative dividend, where our dividend is actually tied to our cash flows. And so commodity price and organic growth all push that dividend higher, a direct link to our own performance. So that all is the low risk, but the high upside that we get is, of course, from that commodity price leverage that we deliver, which, although our risk profile is pretty similar to bullion or ETFs, we do deliver commodity price leverage, exploration upside, and optionality. We deliver growth on multiple fronts over traditional bullion investments. Low risks with high upside, all based on a sustainable foundation. It's a good, strong business model, very strong business model. 2020 was a year unlike anything we've ever seen, and at least in my life. But with the pandemic, we were still very, very active and executed successfully during 2020. On the corporate development front, we added 2 more streams, the Cozamin mine in Mexico owned by Capstone, where we get half of the silver produced from that mine for a life of mine, as long as that mine will operate. And also the Marmato mine, where we get 6.5% of the gold and 100% of the silver from Aris down in Colombia. Good, strong asset, lots of exploration potential. Really excited about the deep drilling on that Marmato project. And of course, Cozamin is one of these mines that continues to add resources, very strong resource conversion ratio and good exploration success. As I mentioned earlier, we listed on the London Stock Exchange October 28th, we started trading. We haven't seen big volumes there, but it's getting better and better and better. We did not do an equity raise during this listing, and so, but we are seeing more and more stock trade on the LSE. We've also been recognized for our sustainability efforts, and in fact, rated the #1 precious metals company by Sustainalytics, and have just actually been included in their top 50 of listed companies around the world. And this is out of a database of over 12,000 companies. To be ranked in the top 50, really sort of captures the effort that we have been putting in on this front in terms of leading the way towards making sure that we deliver good, strong, sustainable benefits, again, to all of our stakeholders. We've also just recently been included in the S&P TSX 500 Dividend Aristocrats Index, which means we've shown consistent dividend growth over a period of time. And so now I've been classed into that. And of course, the Euronext Vigeo World 120 Index. And I myself have just last September took over as the chairman of the World Gold Council. And so this by far the strongest advocacy group for gold as a commodity, and continue to work for that. Very excited about what we're doing in the World Gold Council. A very busy year, especially in the face of the pandemic. So a little bit more about what we have as a company. This is a map showing all of our assets, good, strong, high quality assets, as I've mentioned. The ones in blue are the ones that are delivering metal to us. The ones in green are development projects that are working their way towards delivering the metal to us. As you can see, a very strong Americas focus here. The reason for that is that we did start off as a silver focused company back in 2004. And literally for the first 10 years of our life, we're really focused only on silver assets. And the bulk of silver assets are, of course, Mexico and Peru. In 2013, we started focusing on gold, brought the Salobo mine from Brazil in, and we've started adding, and we're much more diversified precious metals company now, with the bulk of our revenue now coming from gold, a healthy portion from silver, but we've also got some palladium and now some cobalt coming in from Voisey's Bay. As you can see, though, these countries are very low political risk and a good diversified exposure to a number of different countries. On the partner list, I think it's also important to highlight the fact that streaming works as a source of capital for a very diverse but complete set of mining companies, all the way from Vale, Barrick, Glencore, Newmont, the largest gold companies in the world, the largest diversified companies in the world, all the way down to single asset companies like Aris, Goldex, Panoro, and Cucho Copper. All of those, the entire spectrum of the mining industry has recognized that streaming is a very attractive source of capital. That portfolio delivering us 24 different mines, delivering us metal right now, I would argue is the highest quality portfolio within the entire precious metal space, not just the streaming space, but also the mining space. To have 24 mines delivering us metal and 74%, nearly 3/4 of that production coming from the first quartile of the respective cost curve is unheard of. There's no other company with a portfolio like this, especially when you add in the fact that another 16% comes from the second quartile. So we are at 90% of our production from the bottom half of the cost curve, with 24 different mines delivering us metal. This is a very, very high quality portfolio. And when you combine it with the reserve and resource life that we have in front of us, 33 years of reserves and another 7 of M&I resources and 26 of inferred resources, you can see easily a path towards perpetual production for a very, very long time in our portfolio. And in fact, it's why we, for the first time ever, released 10-year guidance. That's how confident we are about our portfolio and how we think that differentiates us from our peers in terms of having that long-term, high-quality production that is going to be around for a long time. So we've just released our updated guidance for 2021 and 5-year and 10-year guidance. As you can see here, this year we expect to produce somewhere around 750,000 gold equivalent ounces. The bulk of the growth from last year is going to come from assets like Peñasquito, where we're seeing great silver production, from continued improvements at the Stillwater mine, from the Constancia's mine, where the Pampacancha zones expects to be coming on stream before the end of the year, or hopefully in the first half of the year, should be coming on stream. And continued developments and improvements at San Dimas and at Salobo as they advance their way towards next year, turning on the switches for the Phase 3 expansion. And they've already released the fact they're looking at a Phase 4 expansion at Salobo. So good, strong growth all the way across the entire portfolio. And of course, Voisey's Bay, where we started receiving cobalt production as of January 1st this year. So as you can see, our 5-year average is 810,000 gold equivalent ounces. The 10-year average is 830,000 gold equivalent ounces. Good, strong portfolio of assets. If there's a slide that sort of highlights the strength of the streaming model, this is probably the one that best does it. And it is the fact that our costs are fixed and predictable. I can tell you that for the next 5 years, our average cost per ounce of gold will be $431. Our average cost per ounce of silver will be $5.31 per ounce. They might be off by a penny or a dollar or two, but they're not going to be off substantively. Each asset obviously has its own cost, so there'll be some fluctuation in terms of production profile, but we know that these are very confident numbers, and this just really sort of highlights the strength, one of the key strengths of investing into a streaming company versus a mining company. Our balance sheet is very strong. We haven't released our year-end financials yet, and so this is all as of the end of September last year. So you can imagine we've had another 4 months of production since this. Back then, we still had a little bit of debt left. We're a company that prefers to use debt, especially when it's so cheaply priced, versus issuing equity. And in fact, I think we may be to the point where we may never have to issue equity again. Expected cash flows this year should be somewhere close to $1 billion. And that just, as you can see, has great exposure to increases in commodity prices as we go forward. And so plenty of capacity to continue growing a company, a very, very strong balance sheet. I can assure you that debt, if we don't continue investing it back into the ground, will continue to push us out of the debt side, or the debt will disappear, and just gives us all sorts of capacity. If we can't put it back into the ground, then we have to look at ways to return more of it to our shareholders. But this is what we think we're really well positioned for. If you look back since we created the company in 2004 and how our production profiles have climbed on a pretty consistent basis all the way across, you can see what we're setting ourselves up for. The last bull run that we had in precious metal prices, you can see the $2 billion in excess cash flow that we generated because of those higher commodity prices. And it's important to recognize that we now have more than twice the production levels that we had back in those days. So good, strong production, which will even further enhance that return of cash, or that generation of cash flow, which of course ultimately feeds back to our shareholders. We do have a good, strong dividend policy where dividends are linked directly to our operating cash flows. 30% of that cash gets delivered back to our shareholders. And we use that to establish a floor every year. So in 2020, the floor was 10 cents per share. And we increased that all the way to 12 cents per share, which was a 20% increase relative to the prior period. In 2021, here in 2021, again, we haven't done our year-end financials, but we will be looking likely at additional growth on that dividend, and it'll be establishing a new floor where our shareholders will be confident we get at least that amount on a per quarter basis through the course of the year. but a good strong dividend that is linked directly to our organic growth and to commodity prices. So the benefits to partner mining companies, there's a long list of why streaming is the best source of capital to the partner mining companies, competing with debt and equity. But really the only two that I think alone make the difference as to why streaming has worked for so many different mining companies is the second one and the third one, the initial value creation and the improvement to the project internal rate of return. And it's really highlighted on this slide here. The top one here shows the arbitrage in value. When you're a base metals company, your precious metals byproduct, non-core byproduct production is valued much less. Every time we announce a transaction, our share price goes up and the partner share price goes up. That is truly creating value. We're not swapping value, we are creating value. And that arbitrage in value, as long as we share that with our partners whenever we announce a transaction, it's truly a win-win situation where both parties win. The track record is there. All you have to do is go back and look at Capstone's share price when we announced the Acosamin agreement. You have to go back and look at Caldas, which is now Aris. Go back and look at Sibanye when we announced the Stillwater transaction. Again, it truly does create value for both parties. And then the improvement to the internal rate of return. Shareholders of mining companies around the world are screaming for a better return on their invested capital. And I can tell you that doing a stream as sourcing as part of the capital during a development project always takes a good mine and makes it a great mine. It dramatically improves the internal rate of return. And really that's because the percentage of capital that we contribute as the funding for the stream, as the upfront funding for the stream, is always a much higher percentage than the percentage of revenue that we take away from that mine itself. The example I would say is Salobo, Vale's very impressive copper gold asset down in Brazil, where we supplied 78% of the capital to build that mine, and yet we only take away 17% of the stream of the revenue in our gold stream there, where we get 75% of whatever gold is being produced. So when you add that all up, that just drives a very, very strong improvement in the rate of return for that capital, the $863 million that Vale shareholders contributed towards the construction of Salobo. A very strong business model. Benefits to the community. This is something that we have put a lot of focus into lately, and I think we're starting to see the benefits of that in terms of how we're ranked and rated amongst our peers. Sustainability is a core value here. This is an industry we expect to be here for a long time. We have always built this company for the long term. We're not here to outperform in the next quarter. We're here to outperform in the next 50 years. The pillars of our sustainability all come from good, strong due diligence from the ESG perspective. When we're looking at assets to invest into, one of our core measures of quality is how is the company doing? How is the asset doing with respect to the community around it? And we don't just look at it from a critique perspective. We also look at it from being a change agent perspective. If there's ways that we can help these companies do a better job, deliver more value back to their communities, to their, their share or their stakeholders, then we take those opportunities. We get the benefit of seeing a lot of different mines around the world, and we get the benefit of seeing a lot of different practices and such around the world. We like to share that knowledge and help all of our partners be better. It's just the right thing to do. We've got good, strong community investment programs, not only to our own communities, but again, the communities around, where we actually supplement our partners' community reinvestment programs. Good, strong policies and practices, sustainability and ESG principles are written into our ethic here at Wheaton. And external and voluntary commitments. A large portion of our own personal and corporate performance numbers relate to how much effort even we individually put into for nonprofits and such. I personally involved in a number of different nonprofits and along with just about the entire company. We are the only streaming company that has formal programs in place. The pillars that we look for: health, education, environment, and community. Those are the four chosen pillars. And as I said, 1.5% of our average net income goes back to the communities around us. 0.5 of that goes to communities where our employees live and work. The other 1%, the bulk of it though, goes to the partner communities, the communities around our partner mines, CSR mines, where we actually put a lot of support in. And in fact, during 2020, I was proud that we actually put together a $5 million COVID relief fund additionally over and above this to provide support to frontline workers. Again, in these communities, a lot of these in very remote locations where the stress on the system to try and manage the risk associated with the pandemic was really pushing the limit in terms of financial capacity. And so we've had a very effective program of providing additional support on this. Again, something very, very important to Wheaton. And we have been recognized for it. As I mentioned earlier on, top rated by MSCI and by Sustainalytics, getting top class ratings. We've been carbon neutral in our own business since 2015. I mentioned earlier on the World Gold Council. I'm now chairman of the World Gold Council. We were signatory to the original responsible gold mining principles, which are important for the industry as a whole, for the precious metals industry as a whole, in terms of establishing confidence and trust about the provenance of the materials we produce, the products we produce. We were the first streaming company to join the UN Global Compact, which is important to us. And so as you can see, we've really started to get recognized. This isn't what it's about, though. It's about doing the right thing and about constantly looking for ways to try and improve the benefits to the broader stakeholder group. So why invest into Wheaton Precious Metals? Well, we checked all the boxes. As you can see, if you're going to invest into precious metals, you have a number of different options. You can buy bullion or ETFs, the GLD, the GLDW, GLDM, all sorts of other, the spider funds. There's ways to invest into gold that way. You can buy precious metal mining companies. There's all sorts of them out there. Not a lot of them on the London Stock Exchange, and a lot of them are very high geographic risk. But precious metal miners another way. Or you can invest into the streaming space. Now, we do compete against other streamers. Lots of the traditional royalty companies have now changed themselves over to be streaming companies and have really put a lot of focus on that. But we are by far the purest precious metal streaming company. As I said, we started getting a little bit of cobalt. About 2% of our cash flow now comes from 2 to 3% comes from cobalt at Voisey's Bay. But outside of that, it is all precious metals. The bulk of it is gold, precious, and a strong silver credit and some palladium. All sorts of other benefits all the way through that you can see here. As you can see by the revenue mix, this is from 2019. Again, we haven't released our 2020 numbers yet. Seems so long ago, 2019. But you can see palladium does make up a bit of value, but at this point in 2019, we were pure precious metals. We were also pure precious metals in 2020. As I mentioned, we have a little bit of cobalt coming in 2021, and that's it. But by far and away, the most dominant in the space with respect to precious metals exposure from the streaming crowd. Our track record, we've invested $9 billion into streams since we started this company back in 2004. We have already received $7.2 billion back in cash flow. We're not too far off of that magic moment of getting it all back. $1.2 billion declared in dividends to date. A good strong annual cash flows, especially at today's prices. We should be close to $1 billion in cash flow this year. This is what's particularly interesting is the $9 billion invested out, $7.2 billion back, and we still have 40 years of reserves and M&I resources and another 26 years of inferred resources. Beyond this, these mines will be delivering value to us for a very long time. The sustainability efforts, some of the highest ratings in the precious metal space, and to be included in the top 50 from Sustainalytics of the World Index, very proud of that accomplishment. All of this is added up to about a 20% average annualized after-tax return from our portfolio for our shareholders. So a good, strong track record. And in fact, if you compare us to gold and silver or even the gold miners, you can see how we have performed on multiple different time horizons. Our average rolling performance, you can see is every single time horizon has actually dramatically outperformed. So I think this is my last slide. So if anyone's got questions, they can start getting ready to ask them. I'm just going to summarize here the huge advantages of investing into Wheaton Precious Metals. Predictable costs, very high quality asset base, good long life operations, leverage to the increasing precious metal prices, a very, very strong dedication towards sustainability, It is a core franchise for our company, and a very competitive dividend. All of that adds up to a very strong company with very strong cash flows, very high margins, and a continued focus on being selective about what we reinvest into. And if we can't find a place to put the money, then it goes back to our shareholders.